But we're awfully close to Halloween, and I am here as a prelude to the unknown. So I've been at this for long enough that I have experienced several unknowns with the credit union movement. The first unknown is mortgage-backed securities. So who here was really familiar with mortgage-backed securities in 2006, but was intimately familiar with them in 2008 when our members were ripping the copper out of their homes as they were being foreclosed? Fast forward a few years later, it's a little bit scary. Fast forward a few years later, nobody had heard of Uber, and our billion-dollar taxi cab credit unions felt very secure in a very regulated, comfortable environment. Uber, people will tell you, was very innovative. They were this incredibly creative fintech. I would suggest that they were simply ruthless in what they did and were backed by very patient billionaires that were willing to destroy an industry and not generate a profit until last year. So our forebears swim in very deep waters, right? But we're at a nexus point now, because what has been added to the deep waters that the credit union movement has already and has always swam in is this current, the speed of change, the speed of adaptive technologies that are driving innovation, are driving small credit unions out of business, more so than any regulator or any upset in the economic cycle could ever do. So when we talk about hyperautomation, Web 3.0, extended reality, and we bring these concepts back to our credit unions to talk about them, and then we start addressing the unknown with our next panel, what does that mean to our credit unions? So how are we applying it, right? What is really important to our credit unions and to our leagues right now? I would ask all my credit unions and my leagues here, what have you done for your laptop policy, for your smart glasses policy, and your AI policy? And are you addressing those things in silos? Because if you are, then you're inviting the next unknown to significantly harm your credit union.